So in the last video, I showed you guys exactly how to catch 100 pips on a higher time frame using the daily and the 4 hour to frame the trade to capture, those explosive moves. But, you may be thinking, hey, Dom, dude, I'm just a scalper, man. I want to be in and out, catch 10 pips, 20 pips and dip, whatever. In this video, I'm going to show you pretty much the same idea of how you can bust down a higher time frame on that same setup that we took in the last video on the 4 hour chart. And I'm going to show you how you can break it down on the 5 minute to the 1 minute and get a super sniper entry with little to no drawdown and capture, 10, 20, or hell, you can even go for the 100 pips. But this one is more so to where you can get those super tight sniper entries. And let's jump into it. So here you see that we have, from the last video, we have it already illustrated. So on the 4 hour chart, what we're going to do here, we already know that this area, it came into this median threshold, right? And it got into that 1 hour order block. So now what I'm going to do, if I'm a patient trader and I want to scalp, right? I don't want to, just be sitting around in all of this accumulation and, waiting for price to, do what it's going to do. So I'm going to delete that really quick. All right. So here, what you're going to do is you're going to use the simple market maker sell model, right? And so as you can see, you have accumulation, manipulation, distribution, right? And so obviously we're looking at this in hindsight, so it's easier to see. But as price is coming up into that 1 hour, that 4 hour median threshold, and it's coming into that 1 hour order block, you're waiting for price to break down and break some type of structure to come back up to give you that confirmation, right? And so as price is creating pretty much all of this sell side liquidity here, you have all of this sell side liquidity right here that's just resting, right? You got all that sell side liquidity that's just resting. And so I'm not spelling right. Okay, so you have all this sell side liquidity on the 5 minute chart, right? And so price is, we know price wants to go lower based off our higher time frame analysis, right? And so what we're going to do is we're going to wait for this break in market structure. We're going to wait for them to take out liquidity on the buy side first, right? And then, because once they take whatever they take out first, we're going to look at as kind of like a Judas swing, right? So my eyes are going here, right? My eyes goes here to that most recent high, right? So I'm looking at this high here, my eyes are here, and then my eyes are there. I want to see them take out those most recent highs, and so run it out right there, right? So you got there. So my eyes go here, and so typically, man, like for classic ICT turtle soup, you can look for them to take price up 10 to 20 pips. This is a smaller time frame, so kind of tread lightly with that, right? So, but what I'm looking for specifically, I'm looking for a purge. I'm looking for that purge of this liquidity, right? I'm looking for a purge of that liquidity, and I'm looking for an order block that's left behind, right? And so we see that. So we get a purge of this liquidity here. They purge that liquidity. It goes up, leaves an order block, and it shoots down, and it comes back up, and boom, we take out that sell side liquidity. And so, this entry here, right? This entry here, you would take it, right there. Let's see. You take it at the, at the wick. So you took it at the wick. I mean, and you can have, a six pip stop loss, and you're going for, you know, you're going for the sell side liquidity right here, right? So that's about 30 pips right there. So that's a 1 to 5 right there, right? Not only that, but since you've lowered your risk, right? Remember, um, remember like in the last video where I showed you it was a 1 to 8 risk to reward ratio. This is how you increase your risk to reward ratios, right? So if say you went for that same 100 pips, say you went for those same 100 pips, say you went for those same 100 pips. Now you just increased from a 1 to 8 to a 1 to 16 by just being a little bit more patient and taking your entries on the smaller time frames. Bro, this shit is really, really, really super simple and easy. You just have to have patience for it. Honestly, you have to wait for the setups like that to happen. So to recap, kind of going backward to our previous video, we waited for the 4 hour. We waited for this 4 hour order block to break down. It came back, it hit the mean threshold of that 4 hour order block. It came into the 1 hour order block, it hit that, and it started to drop. All we're doing is waiting basically for kind of like that retest, right? Or what have you. So we're waiting for that. And on a 5 minute chart, man, like you can get those sniper entries. People talk about getting those sniper entries. This is how you get sniper entries. I'm talking 1 to 16. But in this instance, this video said, 10 pips. So for 10 pips, even at 10 pips, bro, even if you wanted to collect your 10 pips and dip, you very well could do that. You can very well do that and still, be good risk to reward ratio. Damn it. Alright, so I got this goddamn magnet off. So let's see. Boom. So even at it's not like my type of risk to reward, but if you go down to the 1 minute time frame, if we go down to this 1 minute time frame, I'm sure we can refine it just a tad bit more. We can. We did. So you see that order block there? Right? So we refined it just a tad bit more. Just refined it a tad bit more to bring out stop loss. Just a tad bit down. So now we gotta, let's call it a 3 pip stop loss. We got a 3 pip stop loss here, right? Because honestly, if it's gonna fail, you're gonna know pretty fast. You can literally just put it like, around the bodies of, put your stop loss like a little bit above the bodies, or you can put it above the wicks if you want to as well. You get a 4 pip stop loss. You get a 1 to 2. But if you want to be really, if you want to be super tight, you get that 2 pip stop loss. And you want to go for that 10, that's a 1 to 5. Nothing's wrong with going for 10 pips when your risk to reward is 1 to 5 or 1 to 3. You know what I'm saying? But that's how you decrease your risk, and that's how you increase your overall reward at the same time, right? So you do the math in your head with lot sizes and things of that nature, man. But this is super powerful on how to refine your order blocks to get these sniper entries. So leave your suggestions, comments in the comment section below. Make sure you guys like and subscribe. Make sure you check in and tap into the live streams Monday through Friday every morning during the New York sessions. And yeah, talk to you guys soon.